You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast, coming to you from Montecito, California. Before we begin, I want to remind you that there is a website associated with this podcast. It is called wealthformula.com, not surprisingly, and that's where you can go if you want to get more out of this community. Specifically, you could sign up for some of the newsletters and also the accredited investor group, which, if you are an accredited investor yourself, you may want to join. And I'll explain a little bit more why in a moment. But go to wealthformula.com and sign up, because who doesn't want to be part of the investor club, right? It's a free club after all. Well, let's talk about why, in part why. Well, we're in the fourth quarter. Our investor club, as I just mentioned, is going to have one last shot at multifamily real estate in the next week or two. And last chance really to leverage 60% bonus depreciation. That'll go down to 40% next year. But of course, taxes are, not the only reason to invest in real estate. There are a lot of other reasons to jump in, especially right now in the market that we have. After a period of uncertainty, I believe we've entered a growth phase in the real estate cycle. Even if it hasn't been obvious to everyone, it's obvious to the big money, and that's for sure. The market is showing clear signs of recovery, and of course, that makes it a really good time for making apartment building investments right now. It might be the best time, I would say with some certainty, it is the best time to invest in multifamily real estate, at least in the last decade, probably a little bit more than that. Despite recent economic turbulence, the U.S. economy is held up better than expected. Inflation's cooling, growth is stabilizing. And all of this is benefiting real estate. As I mentioned before, big money is coming in, is returning. Lenders are easing back in, and the gears of the market are finally really turning again. And for those who've been in the sidelines, I truly believe, and I'm going to pound the table on this, that I believe it's time to jump back in. As always, though, the key to real estate investing is making smart buys in the right locations, right? You always make money on the buys. While some areas are certainly oversaturated, there's others that are thriving with job growth and migration. And usually, as you know, those are the things that we look for when it comes to real estate investing. So cities like Austin, Charlotte, Phoenix, it's where the tech and business sectors are becoming huge. They're booming and absorbing new house supplies with ease. And demand for rentals in these high growth cities remains incredibly strong. So vacancy really isn't a concern in the markets that matter. And of course, that's really what we have to target. Furthermore, multifamily properties have never been more attractive to institutional investors. Okay. They know that people will always need housing, with home ownership still expensive. They're seeing that rental demand continues to rise. And even with new units hitting the market, the long-term outlook is really solid, and it's driven by something that is very easy to see, which is a nationwide housing shortage. So as interest rates stabilize and transaction volumes continue to increase, that's unlocking liquidity, and that, of course, drives prices up. But remember, the best deals happen when you buy at the right time. So you have to beat the froth. You have to beat the froth if you really want to do well in real estate. The thing is that right now, of course, people are kind of turned off to a certain extent because of some of the traumas that they have seen or witnessed or whatever in multifamily real estate over the past 2 years. And you just have to understand that it's part of the cycle. It's unfortunate, but the thing is that while there are some people, including myself, who, had some situations in the last 2 years that were, not great, you also have to look at this as an opportunity for buying, right? You buy if the market's low and it's on the up. That's a time to buy, not when it's like, in the ninth inning. Prices are favorable now, but they won't stay that way for long. We're seeing a slowdown in new construction. with starts down 45% from pre-pandemic levels. By 2026, you're going to have fewer new properties coming to the market, tightening supply. That's going to result in stronger rent growth, higher occupancy rates. And again, that's the market's going to start to heat up, and a lot of money, as I think even Zolfi's mentioned on our Wednesday shows, is sitting on the sidelines, right? And it has to come in because it's going to be chasing yield with these interest rates coming down. So you look at cities like Phoenix, Dallas, Tampa, take a look at those. Economic vitality and population growth are really fueling demand, supporting rent growth. So, and even major cities, we don't usually look at those as investments because of the cap rates being so darn low typically. But New York and Los Angeles, they really struggled during the pandemic, and they're bouncing back because people are returning to urban areas as well. Bottom line is the opportunity to me is pretty clear. Markets with strong job growth and migration are really primed for outperformance over the next several years. So if you can identify these high growth areas early, then you're going to look at a possibility of significant returns as the market recovers, builds momentum, as is almost inevitable at this point. So this is no longer just about surviving a tough period. I know we've talked about survive until 25, and that is definitely the case for some apartments out there that we have actually been buying in our group through the Accredited Investor Club. But it's not only about survival right now, it's about thriving. And that is investing in a market that is trajectory is up and there's still opportunities to buy bargains. So by focusing on regions with booming economies, rising populations, persistent housing shortages, you're really setting yourself up to capitalize on the next wave of growth. The market's moving. Multifamily investments are where the smart money's going. So again, those who act in the next, year, I think, especially are going to do really, really well. Anyway, that's it for my take on this particular topic. But my guest today on Wealth Formula Podcast, well, he's an expert on real estate of many kinds. He's well versed in many types of real estate. He's an economist. He's also a consultant, and he writes for the U.S. News and World Report on real estate. So he's certainly an expert on the topic. And when we come back, you will get his take on the real estate market. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Patrick Duffy. He's been a writer as part of his work for U.S. News and World Report since 2022, focusing on real estate, economics, and other trends related to the housing markets. He's also currently the founder and principal economist with Metro Intelligence and has over 25 years of experience working with some of the country's leading real estate consulting firms, including Zonda, Hanley Wood, RCLCO, the Concord Group, and Beacon Economics. He's also managed the market research department for a public home builder operating in multiple states. He is obviously very knowledgeable in the world of real estate, and happy to have you on the show to give us your insight, Patrick.
Thank you, Buck. It's great to be here.
Let's kind of start. Give me sort of your perspective on what is going on in real estate right now. That's a loaded question because what's going on with, single family homes is very different from multifamily, is different from commercial. But what do you think the most interesting movements in the real estate market as of this moment are?
I'm working on an article for U.S. News on different commercial, and in that, the narrative is all of these changes being accelerated since the pandemic, and I think the same is true for residential.
Yeah.
And so if you take each of these sectors, trends that we were sort of seeing, now we're seeing playing out in faster real time, partly because of technology. So we're seeing that as well. But it's in flux. And the big thing now is like, what's going to happen with like return to office and work from home? And we don't know where that's landing yet. So I think people are still trying to figure all this out. And that's going to have an impact on housing demand.
I mean, it's hard to imagine that anything goes back to the way it was. I mean, especially when you've got companies that have been able to essentially eliminate rent as a part of, their costs and have people working at home efficiently or whatever. It's really hard for me to see office coming back in any sort of meaningful way.
I think it's going to be kind of specific. It's going to be bifurcated. We're seeing that in all these different sectors, commercial and also residential to some extent.
Yeah.
And so it depends where you're at. And now what's really interesting is that landlords are partnering with tenants to bring workers back because now they have a shared goal. So what used to be sort of a difficult relationship is now becoming more of a partnership, and that's kind of a new thread.
So talk about that. I've not really heard that. How does it work?
Well, a lot of it's what can we do to make it more exciting to bring people back? Sometimes it's amenities in the building.
Mhm.
Sometimes it's what can we create in our offices to make people want to come back? One of the experts I talked to, there's this psychologist in the 1940s, Abraham Maslow, talked about the hierarchy of needs, human needs and motivation, and this expert applied that to the office. So if you want people to come back to the office, you have to have a reasonable commute.
You have
Yeah,
to give them food. You have to give them food.
right. Uh, Environmental controls. It can't be too hot. It can't be too
Yeah.
cold. It can't be too noisy. You need space. So once you have those basics, then you can bring back people back in the office. Even with that, though, I think it's going to settle in at around, even the ones that have the hybrid, it's probably going to be 3 days a week in the office, 2 days at home. Most CEOs, the quiet part that they're not saying out loud is that they prefer five. But when the labor market was really tight, they wanted to provide flexibility. Now that it's starting to loosen up a little bit, they're starting to say, okay, this is what I really want. Like, I don't know if you read about Dell wants its salespeople back 5 days a week
Yeah.
and without very much notice, which to me says they're looking at the labor market, says, okay, our hands is a little stronger now.
Yeah. The other, yeah, because there's some data. I mean, I don't know it offhand, but I've heard people talk about productivity going down when people work at home, which is not surprising. And so, guys like Elon Musk wanting basically all of his people to work from work, not working from home. So there is probably some balance that needs to be worked out there still.
Yeah, and there's a guy named Dr. Nick Bloom from Stanford. He tracks this and he pushes back against this. He says, "Oh, there's like 50 different studies that says that actually productivity it can be better at home." But it kind of depends on the person. I've worked from home for 25 years,
Yeah.
and you kind of learn how to do that. For me, the opposite is not to work too much in terms of it always being there.
Yeah.
So I think it depends on the person. And if you're young, you're starting out in your career, you want to be there for the networking. And it also depends what you do for a living. Like attorneys, there's certain people can work from home a little easier, but other people need to be in the office to provide the mentoring. So
Yeah.
I think it really depends on the company
Yeah,
and
it's
how the
it's interesting too. Like I know just listening to people in Silicon Valley, for example. I'm not there. I'm in Santa Barbara and not really related to that space, but I know people in that space who say that one of the big things that's been lost is, Steve Jobs had made a big deal about people running into people by accident all the time on the Apple campus because he thought it inspired ideas and productivity and all that kind of thing. And a lot of that is just lost. And I think you mentioned networking as well. That's huge. I mean, how do you, as a young person, how do you get to know anybody or look for opportunities? A lot of those things, back in my day, used to happen because you'd have lunch with somebody, or you'd just be chatting with somebody fortuitously.
Yeah, and if you're young, you wanna be doing that.
Yeah.
If you're more established in career, but there's the other side of it, the mentoring. So if I'm an older person in my 50s and I have all this experience, but I don't wanna be in the office, then who does the mentoring? I mean, you can do that somewhat over Zoom, but again, you don't have those sort of accidental conversations in the hallway and you run into someone in the kitchen, and so I think that's lost. So I
Yeah.
think we're still figuring this all out.
Well, let's move to the housing sector. Let's talk about single family homes. Obviously, the Fed has changed course on rates. The Treasury kind of predicted that ahead of time, so the mortgages were headed south before the Fed moved anyway. What are you seeing with single family home prices, and what do you expect to have happen here in the next year?
Well, it seems to me they're kinda holding their own right
Hmm.
now because I know it looks like mortgage rates bumped up again,
Yeah,
despite the Fed's decrease, because there are other factors at play here. They're still kind of trying to find inflation. The labor market's a little stronger than they thought, and so the mortgage market's sort of looking at that ahead and not declining as much. I was looking at some recent numbers, and it looks like there's more inventory coming onto the market, and things are taking a little longer to sell.
yep,
Prices are still really holding up, but people really prefer that privacy of the single family home. And now there's the whole rise of single family homes for rent, which is a rising asset class. So, and then there's the thing about one of the offerings from the Harris campaign is, oh, we're not going to allow you to have certain write-offs if you own 50 or more homes. So that's 3% of the market, though. I don't think that's going to really move the needle that much.
Yeah.
It's more about where are we building? How do we build? Because people look at why don't we have enough housing? And it's really a local thing. So you could say from the federal level, we want to encourage more housing, but it's really going to be deployed at the local level. And that's where the codes and the approvals occur. So it's going to be a while to get everyone on board because people don't like change. If you've lived next door to vacant land for a long time, as maybe in Orange Grove, and now it's going to be housing, even though it helps overall, maybe you don't want that across from you.
Well, from the standpoint of interest rates, I think one of the things that's tricky and has resulted in, again, sort of lower liquidity of real estate is that, if you bought when interest rates were, I mean, if you bought back in 2020 or 2021 at those interest rates, a lot of those people could not afford the same house right now because the mortgage essentially would be double what they're paying. And so they're kind of, even if they wanted to sell, I mean, they can't really sell because like they couldn't buy a replacement home essentially that would be comparable in price. So do you see that dynamic in the market, and how do you see that all playing out?
It's going to take time. The lock-in effect is really
Mm-hmm.
a strong, motivator not to sell. But life happens too.
Yeah.
People get divorced, someone dies, people get pregnant. They want, they have a job move. And I think some people in locked in place for long, they're kind of at their limit and now they need to move for different reasons. And right now it's kind of anecdotal. I think the interest rate's really going to be part of it. Maybe people come out with different programs like assumable mortgages and things that I've read about and kind of unlock it a little more. But the problem is the mortgage market, when it's syndicated, you have all these different investors. How do you do that? It's not like
Yeah.
you go to the SNL like back in the day and say, hey, can you work with this on this mortgage?
Yeah. Yeah. How about multifamily? Now we have a different dynamic there, and you and I were talking about this a little bit offline, where now you're not really your mortgage rates are dependent, at least in terms of the Freddie Fannie stuff. The agency debt, it's based on SOFR, and SOFR is going to tick down with the Fed rate. So what do you see happening there?
I see some multifamily taking advantage of that. I mean, certainly the demand's there. We were
Hmm.
chatting earlier
Yeah.
about how we've had the most units under construction since the 1970s, but that's in certain markets, mostly in the Sun Belt in the South.
Yeah.
And that's being mopped up from what I've been reading even faster. So the demand's certainly there. You know, uh, I think it's going to happen over time. It'll be interesting to see where the Fed comes with its next rate declines. Maybe it's if you can hold on till 25, I've heard about that. Maybe
Yeah.
they can, if they're really in trouble with their existing lender, maybe they can sort of, I don't want to call extend and pretend. That's been another one. Maybe not pretending. Maybe they go say, hey, look, can we refinance this the middle of next year? Or maybe they can make some forecasts on where they think interest rates are going to be. But to your point, yeah, that's a whole different thing versus a single family typical mortgage.
Yeah, it's really kind of an unusual situation because as we were talking offline, you've got nobody who doesn't have to sell right now is selling. So the only thing that you're really seeing is things that are generally deeply distressed. And, and I mean financially distressed. I mean, a lot of these properties could be functioning perfectly fine, but the debt doesn't really allow them to continue managing these properties. So that's a tricky thing. And I think some of it, and a lot of it's probably going to get remedied by the fact that if SOFR continues to dip over the next year, it'll make it more possible for a lot of refinances into agency debt. That probably is going to extinguish the vast majority of distress. But yeah, and of course these mortgages are shorter term usually too, whereas like the single family stuff, you're talking 30 years and or something like that. That's going to take a lot longer. So
Yeah, and they're also taking some extending to 40 years,
yeah, yeah.
to bring the price down, so or to bring the monthly payment down.
Let's talk about markets. And part of what I'm curious about, this doesn't affect everybody, but with all the hurricanes going on in Florida, it just seems like a massive setup for a huge housing crisis because the value of those houses and condos and that kind of thing have got, I would imagine, are going to continue, are going to plummet if this kind of, if this kind of climate stuff keeps happening. Do you see that? Am I kind of alone here, or is that something that people are thinking about as a potential really big problem for I guess, for the mortgage industry?
Yeah, yeah. To your point, I went to a conference in May called Going to Extremes, and it talked the basic premise is that mortgages are written over 30 years traditionally, sometimes
Hmm.
15, but mostly 30. But insurance is something you have to buy every year.
That's right.
And I came across this personally. I'm a landlord and I couldn't source insurance here in California in June. So I had to scramble. I only found two carriers willing to write me a policy. So, and we don't even have what they have in Florida. So some people think that Florida could become a market of rich people and large landlords
Yeah.
because people can afford the monthly payment, but they can't find the insurance. And right now, you're always with HOA in fees and special assessments going up. People are dropping the price because they can't come up with the tens or hundreds of thousands in assessments that they need to match these new laws that have been passed in Florida.
Yeah, and it seems to me that the problem could become even worse because, the insurance we see this in California. I mean, you have insurance providers just leaving, right? And it becomes like really, really hard to get insurance in some situations. I got to imagine in coastal Florida, that's going to be something that happens. Obviously, there's some really wealthy people there, and if they own their homes outright, they don't have to carry home insurance. But the vast majority of people out there, they need mortgages, and so, to me, it seems like that is a recipe for completely destroying the prices of those properties. Like, who's gonna buy it if you're paying 5% per year of insurance, or you can't get insurance at all? If those are your options, who's left to buy them?
Right. Or you get lender placed insurance.
Right,
It's expensive
right,
and less comprehensive
right,
and is meant to be temporary. And
right,
insurance companies don't want you to be under lender placed insurance for a year or two. It's supposed to be a month or two.
right.
I think we're going to see this play out. Maybe Florida will be a good test case on how we wrap our arms around climate change in the areas that are most prone to it and how
Yeah.
to handle this.
What do demographics look like from your end? Where are people moving to right now? And is it any different than it was, say, 2 years ago?
That's where the return to office comes in. And not yet. It's the Sun Belt in the South mostly. I do read anecdotally about people say, well, where are the climate, places to move
Yeah.
and the havens and Mountains Carolina was supposed to be that because they didn't think, oh, this hurricane's going to come through inland and dump all this rain. So now they're saying no place is completely safe. And that's just sort of anecdotal anyway. I don't know if there's been like huge amounts. It's where the jobs are.
Yeah.
And that's the job growth has been in, yeah, the Sun Belt, Arizona, Texas, Florida. Yeah. Recently, we may see that change
Yeah.
because of now there's this added wrinkle of, oh, shoot. Yeah, I love the area. I love the people. I love the job growth. However, if I can't get insurance, I can't live there.
Right, like Tampa, for example. I mean, great market, great real estate market for, last several years, but I mean, they're not that they're kind of at risk there, right? So I would, if I'm bringing a big business there, that's got to be something that I have to put in, my calculus as I move into there. And you're right, it's ultimately about jobs, but I mean, businesses have to make those decisions too about climate related damage and that kind of thing as well. So, in terms of the election here, how do you see the election policy wise as it relates to real estate? What should we be thinking about as real estate investors?
Yeah, well, they have such different plans. Harris has this plan on, the tax credit, which is great, but I mentioned this earlier. It's great from encouraging demand, but how do you provide supply?
Yeah.
So if you have this tax credit program, how's that going to play out? And could that be inflationary? Because you only have so many people, and the building industry continues to struggle with sourcing labor. So that's a whole nother wrinkle to it too, if in case they go for new housing.
Well, I think
So
in my view too, the other problem with that is if you're giving everybody $20,000 tax credit at closing, to me, it's just going to end up raising prices of those properties. It's just going to create. I don't think it solves any problem at all with regard to the overall issue. I think it's just going to make prices of first time homes go up by that amount because sellers will know that that's something that's available to them. It'll create, as you said, more demand, and that'll be passed on in the sales price. So I don't
yeah,
get that one. Anything? What else?
I
Yeah.
wonder if there's a way where the seller would know that. I mean, they'd look at the closing statement would be there. So,
Well, if there's enough of
or
those
maybe they want to sell.
people, if there's enough of those people, they wouldn't even have to know, right? Because demand would just simply go up because there'd be an entire group of people who would be able to buy that weren't able to buy before.
Yeah, but maybe if you've had your house on the for a while and you need to move, maybe you would do it and then it would help homes sell faster. I mean,
Yeah.
that would probably be anecdotal.
Yeah.
Um, and then there's the other side of it about that are immigrants coming in bidding up the prices of homes. Well, immigrants are also 20-25% of the labor force for building homes for construction. So what's going to happen on that? The tax credits and lowering tax, that's all good too. But what I want to see from both candidates is more policy detail on actually how this would play out.
Yeah. Good luck with that.
Yeah, I know.
Yeah.
We're still in the pandering mode.
Yeah.
So details, details, details.
So, I know you've been interested in technology. How is technology, specifically AI, let's talk about impacting real estate from your perspective?
Well, covered data centers is such an important and huge asset class. And now it's kind of competing against resources. Like there's only so much power and water. And now they're introducing new technology. How do we cool these data centers?
Yeah.
And it's great for, let's say you have a fairly rural community that doesn't have a great tax base. It will bring in money. They will actually pay more in taxes than they have in benefits. So they're not having the children in schools, and it's sort of a net benefit. However, if there's only so much electricity, could that or water could that impact the local community? And I think they're still trying to figure that out. I mean, they're restarting a reactor at 3 Mile Island to provide nuclear power. So that's one way to do it.
Little PTSD. I guess most people don't remember. I mean, I was I don't know. I was like a little kid when that happened too, but the whole meltdown. But it's bringing it all back. But yeah, I mean, AI. The one thing I think that people need to appreciate about AI that I don't know that people understand is it requires an enormous amount of energy, and so that is going to be one of the challenges in that space. And I just wonder how that's going to, how that's going to all affect real estate as well.
Yeah, it remains to be played out. There's a huge amount that's under construction.
Yeah.
I think Virginia is like the biggest in the world, actually. I mean, there's like 40% of global supply is in the United States. It's such an interesting thing to watch because there's insatiable demand. It's not just AI. If I'm driving in my car and I want to ping different cell towers, there are servers that are going to serve those cell towers. I'm going to need access all the time, and people demand that. So they say, okay, yeah, there's this other side of it on the resources, but I want what I want, so figure it out. And I think that's kind of where we're at.
Yeah. Well, last question I want to ask you about is so we know there was this recent issue with the real estate commissions and laws in that area where essentially the sellers are not required to pay the buyer's agent technically at a sale. And from my perspective here in Santa Barbara and Montecito, it doesn't seem like it makes any difference at all because they're essentially circumventing that by various little ways in the contract. Has this changed real estate at all? I mean, has it just ended up being sort of a meaningless nominal change?
Yeah, I mean, are you suggesting that legislators passed something that wasn't fully through? I mean, it was a lawsuit, and it wasn't fully thought through.
Right.
It I think you're gonna have a shakeout in part-time agents,
Yeah.
that maybe it's not as easy, so it's gonna be the people that really have to earn it, but what's to prevent me from picking up the phone? And it's just not on the MLS, that's all. But
Right.
what's to prevent me picking up the phone and saying, "Hey, this is what is gonna be expected."
Yeah.
So, I think it's too early. I think gradually over time from what I've been hearing, people say, "Hey, I only wanna pay this," and then they still don't get their home shown. And all it took the problem that was on the MLS, and it just took it offline.
Yeah. You know, one other thing that I found interesting, and I don't know if this is across the board or it's just in my area, but for example, my house is on sale right now, and I guess one of the new things here is that in order to see a house now, the buyer has to come with an agent. They can't come without that agent, which I mean, it seems a little. Basically, you're forcing that transaction to have a buyer and a seller agent anyway, right? I mean, to me, that seems like another thing that could potentially be challenged. But
Yeah, and then they have to sign a contract
right,
with that buyer's agent before they even go to the house. And if I'm just sort of a looky-loo, maybe I'll cut down on looky-loos. I don't if your house is for sale, um, it'd be interesting. You have an open house. Well, they say open house is really for the agent to get new clients, and it
yeah,
doesn't necessarily move the needle. Are you seeing I guess the question is, are people seeing fewer people come in because they're not willing to sign this contract? Maybe you just wanna see what the decoration's like. Maybe your
yeah.
neighbor just wants to see what you've done for your house.
Yeah, I think that the open houses are a little different because you're not required to have an agent, so it hasn't really changed that. I mean, I think, you know, at least where I live, open houses are pretty much worthless because again, it's mostly people who are just kind of doing real estate tourism. It does hurt people's sellers a little bit because it is harder for buyers to actually see a place. So I don't know. It just seems like it's just created another problem rather than fixing anything.
Well, maybe that would make open houses more popular.
Yeah,
They don't
you
have
would
to
think
be
in theory, you would think,
yeah,
but who
right.
knows? Anyway, good talking with you, Patrick. We covered a lot of different things. Obviously, you have your pulse on the real estate world out there, so I appreciate you sharing with us. And where can we learn more about you? And maybe you could talk a little bit about your consulting business too.
We're in the middle of redoing the website, so you can find metrointel.com or you can find me on LinkedIn. I post almost daily about not just the housing market, but economic news. And then on the US News website, you can type in my name, Patrick Duffy, and then you will have all of the array of different articles I've coming out. I have two coming up on commercial real estate markets, on office, data centers, retail, lodging, and industrial. And all of these changes, there's bifurcations in all those markets about who's succeeding, who's not, changes, technology changes. I talked to 7 different experts, mostly from CBRE, one from CoStar. I learned so much when I talk to these people. So
Yeah,
I
yeah,
hope your listeners can check out this article because it ties into larger cultural and economic shifts.
right,
Because everything, even data centers, everything impacts land use at some point.
right. Fantastic. Well, thanks so much, Patrick, and I'd love to have you on again sometime in the future.
Yeah, gladly. Thank you so much for today, Buck. I appreciate it.
Be right back. Welcome back to the show, everyone. Hope you enjoyed it. And just as a reminder, if you've not done so, again, if you are an accredited investor, join the Accredited Investor Club, get onboarded, and at least give yourself the opportunity to see some deal flow. You may or may not decide it's for you, but as the end of the year comes in here and as there are some tax plays involved, you may want to make sure that you at least get an opportunity to see what's going on. So go to wealthformula.com, join the Accredited Investor Group if you qualify. That's it from me on the show today. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.